Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, July the 5th. The year's 2020. Let's talk trading. It's time for the weekly open and gap. As you should all know by now, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, on the weekly gap, and by the way, this is the dashboard. Somebody was asking about the weekly gap indicator here, but no, this is this part of the dashboard, and one of the functions, if you come down here, is the gap function. Okay, so just to clear up that. And you can see that the pound dollar gap down, that's what red means, gap down, and then it filled the gap. And you can see where it is right now, 33 pips above the open, bumping up on a new high for the day. And then something that traders, some of the new traders might not be aware of, one of the things that we do, and I've mentioned this before, is before you look for a reversal, you want to see the range up in the somewhere around 100 pips, 90 pips at least, before you start looking for a price to reverse, because price needs to expand. Okay, so here now, of course, it could come back down below the open. So until price expands, if it's above the open, you want to look for longs. If it's below the open, you want to look for shorts. Then after it reaches that area or that range where, like I say, it's somewhere probably around 100 pips, maybe 90, maybe as low as 80, because we don't have the ranges like we used to, you can start looking for reverses, but it has to expand before you look for reverses. Otherwise, you can really get your fingers burned. And if it crosses above the previous day's high, like it has right here, you really want to be careful because, like right here, it could go up a whole bunch. You're looking for reverses. So you have to make sure it hits that point where chances are it really is going to be a reversal. And one of the things that can keep you out of trouble, I always say don't trade against the H1, don't trade against the H4 either. Stick with that until it reaches that expansion. So for the month up 93, for the week up 32, and ditto for the day. For the year, we're still down 753 pips. And you can see there's that yearly open up there. Okay, look at this. We had an inside bar 14 weeks ago. We broke through. We're up 18. So inside bar traders, there you go, nice and easy. Once again, this is a dashboard. And you see I've got the inside bar plot here. 3 instances, one for a day. And then I've got one, see, indicator tag 1, the other one was 0. And this is a week. And then the third instance, see, indicator tag 2, and this is a month. Same indicator inside bar plot. And it shows those horizontal lines. And you can actually shade also, but I only shade the daily. Otherwise, you get all those crazy color combinations. So that's how I set that up. And once again, any indicator that has the year after the TRO, that's donational. Otherwise, they're just free to download from where I post them over on Crestlick.com. So far this Sunday, we're into 7 hours of trading. No, there's over 100. But still some nice movement here. You can see we broke out at a previous day's high by 6 pips. So if you had a little trade sitting there waiting to take, 5 pips, breaking out, maybe you trade heavy, $50 a pip, $20 a pip, maybe $10 a pip. You could put some real money in your pocket. So when you trade, you don't really want to be a minimum wage trader. You definitely don't want to make less than minimum wage when you trade. Okay, the pivot point here was above the open and we gapped down, but it was within the buy zone. So there really wasn't much of a pivot point bias, but we did have that gap. So once again, just long, and it paid off. And for those of you wondering, just the TRO buy zone. Once again, free to download. The rat zone, once again, the rat zone, TRO rat zone, this indicator, free to download. But caution, range too low. Don't even look for a short there. And the pivots, we hit the monthly pivot. I think we hit it once before. Yeah, we already had hit the monthly pivot. Now, where is the weekly pivot? That's what we need to find. And the weekly pivot is down here at 1.24189, call it 124.19. So we might have a pullback to this weekly pivot. For the daily, we've got 2 missed from last month, 1 miss from this month. Here, 23.53, right down here. Took out that pivot the day before, already took out today's. On the weekly, we haven't hit this week's pivot, so maybe look for price to come back down and take out that pivot. And people were asking about the wick zone. Okay, the wick zone is actually the high top bottom low old 2014 indicator, donational. And as I've mentioned before, you can use the TRO HL5 indicator, free to download, that will also do the wick zone. It'll actually shade it. And in fact, it's even better in one way because it'll show you the distance in pips. And I hadn't put that code in back in 2014. I don't even know if I had thought about doing it back then. So there's an advantage. So it will shade the wick zone. It won't give you this, but do you need it? That's up to you. Okay, just showing you the smart ranges here. And here's yesterday's high. You see here how it poked through once, poked through again, 3 times a charm. It moved up, making some pips there. So I'm thinking about this month. I think I promised you guys I'm going to do trading step by step, and we'll cover some different topics. But I'm going to tell you, it's not going to be anything new. You're going to say, well, you told us that before. We want something new. You're not going to get anything new because you see, trading is something that should be repetitive. It's something that it's just a few things that you do over and over again because they're successful. You know, basically, you calculate, you decide how much you're willing to risk per trade. You always have your stop loss set accordingly. You decide what method you're going to trade. You're going to decide which pair you're going to trade because you're going to pick the pair that works best for that method. See, a lot of people try to use every method on every pair. Some pairs work better with some methods, and other pairs work better with other methods. And that's why we run these statistics. That's why I go through all that. So I know some of the best pairs to trade for each of the methods. Now, of course, sometimes based on where you are in the world, the pair that might be best might not move a lot during your time frame or during your trading times. So you might have to pick a different pair. So like if you're in the Asian session, you probably want to, or an Australian session, you want to pick either the yen or the Aussie and or the New Zealand pairs. It's just that simple. And we're just going to talk about, trading step by step. What is trading? It's entering at a level. That's all it is. It's you and picking a direction based on something. So, I mean, this simple price action screen, you see price, the H1 candle color. If it's green at the line, you go long. If it's red at the line, go short. Sometimes you win, sometimes you scratch, maybe sometimes you lose. But then here, green at the line, winner, green at the line, winner, green at the line, winner, green at the line, winner. But see, the first 2 or 3 hours of the week, these are usually small. And this candle here looks huge. Chances are I wasn't watching, but you probably had the bid sitting here and the ask sitting here. I mean, that's just the way some of these brokers do when the week starts. You get 10, 20 pip ranges between, or spreads between bid and ask. It's just ridiculous. But you can see right here, it's settled down. So once again, you see a 3 ball on top, but there's only 37 pips. You shouldn't even think about reversing. Don't even think about reversing. That's one reason. Range is too low. Second reason, it's broken out of the previous day's high, which I believe is right here. Well, a lot of times it's going to go, 20, 40 pips past that high. Don't even think about the reversal until that comes up. So once again, in trading step by step, if you're looking for something new, you're going to be disappointed. But, if you want to put it all together, especially if you're starting out, this is about as good as it's going to get. Okay? Because there's only a few simple steps. I mean, your risk management, your entry, select a pair, and then it's pretty much execution. And part of execution is that brain management. So you do what your plan tells you to do. You don't fly by the seat of your pants. You don't second guess it. It's here. Price is, if this is your method, green at the line, you go long. You don't think about anything else. Green at the line, you go long. Green at the line, you go long. You don't think about anything else. You do what your method tells you to do. And if your method says, okay, if it goes to 5, put in a break even plus 1, move your stop up, and it goes up here and you maybe had 8 or 9 pips and you get stopped out, that was your plan. So it goes up here, same thing happens. That was your plan. It goes up here, hey, now you're still in that trade. Because what you don't want to have happen is, oh, well, this time I'm not going to move it up, and then it comes down and it hits your stop. Now that's going to get you all twisted up, and we don't want that. Because I didn't really show these things, but you guys know that risk management, lose no more in any particular trade than what you're willing to risk. The brain management, no more of this nonsense. Because we don't want your brain messed up. You don't want to feel all that pain and anguish and stress because it doesn't come from the market. You do it to yourself. Okay? And then, oh, I didn't put the money management screen up there. But anyway, you have to decide when to take profit before the market takes it back. It's just that simple. Oh, there it is. It needs to be moved over here. Is what happens. But yeah, the money management. Take profit before the market takes it back. Maybe you take 50% off the table and move stop to break even. 5 pips or more, 10 pips or more, you do that. Or maybe you move it to break even plus 1 when you're up by 5 or more pips. And then you just let the whole thing ride. But you got to realize every win is luck because you don't control the outcome. And you have to get that fixed in your mind. And that's one of the things that, other traders might disagree, but that's okay. Everybody's entitled to their opinion. So just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if it's your first time, please subscribe.